Hey, I wanted to talk to you about builders. If people have gone back and watched your playlist, which I highly recommend, we've been talking about builders for a while because you were one, both kind of luxury and first time home buyer. You've done it all. You've pivoted, but you made important calls. We got a report on home buyer sentiment. It's down 9 months in a row again, which is
Home
stuff.
builder sentiment.
Home
Home
builder
builder.
builder sentiment. I apologize. And 9 months in a row. And, I think there's a lot of people who have never built a home making interesting claims. But as a home builder, I thought maybe you would talk about what's going on, where this goes from here, and then we'll actually pull up the article as well, just to see what they say.
Yeah. So what is the interesting claim?
Well, the interesting claim is, we have all of the, record numbers of housing inventory. It's all going to come. They're going to keep building and lose money on every home. They're trying to take 07, 08 actions where builders weren't paying attention and they clearly overbuilt into a falling economy. And they're trying to say to do again. I believe, as you've told us, home builders are far more cash flow sensitive. They're watching it better. They didn't overextend themselves. They're doing smaller, big communities, but smaller phases. So they're really controlling cash flow. So I don't see this epic crash. And I also think this, 9, 10, 11 month supply is a joke because a lot of that is pads that won't be built for months, if not quarters.
Yeah. So, home builders are nimble and they learn big lessons through, earlier years. Obviously, there's some builders out there now, smaller, regional, that weren't around during 2008 and 9. But, every market's different. So there's still markets where builders are building and selling pretty much as quick as they can get done. But on a national average, yeah, sales are way down, traffic's way down. Builders are now discounting homes deeper because it's getting worse as the rates have gone higher. The rates pulled back a little bit, then they've gone back up again. You can still get interest only. Builders are offering rate buy downs, incentives, discounted prices. And again, it's like we said, builders can and will cut fast and cut first. And they're just getting started. The other thing they've done is they've pulled back on new starts because although costs are starting to come down a little bit, lumber and things like that, they haven't come down enough. So
Right.
land is still record high prices. Development costs are still record high. Getting through the regulatory process is still expensive and adding a lot of cost to the process. And it takes a little time for labor to adjust as well. As builders start pulling back, more labor becomes available. And, so that will adjust. But the big thing is the major components of a house have not come down yet. Your mechanicals, your copper, your electrical,
Labor.
things like that.
Yeah.
Those things are still really, record highs.
Yeah. When I look at home builders and I go back to our past conversations, you've been dead on, right? The standing inventory, it's going to get slashed, right? They had a buyer, they backed out, whatever reason. Standing inventory, they're going to slash and burn. They want that cash back. But yeah, the next set is going to get smaller and slower. They may stop. They again, builders are certainly the national ones. They will build where people are buying and they will stop where people aren't. It's I think builders are going to shock people at how fast they pivot and that they go to building. They just build other things, right? The builder of the 2008, 9, and 10 that was doing 1,000 house communities, they don't do that anymore, right? They do them in phases, chunks. I think it was Hovnanian come out saying, "Hey, we have 4 sale communities that we are turning into 4 rent communities." That was the first, and there will be others. So, what do you think of all
Yeah,
that?
there was back in 2008, 9, there wasn't enough demand. We had
It
way too
wasn't a
many, I
thing.
mean,
Yeah.
way overbuilt. And, that's the cycle in real estate as credit comes available, financing is cheaper and, readily available, more abundant. Builders and developers overbuild. That's what we do. And you saw it in the Miami condo market. We had towers in Miami just staying there empty,
Yeah.
and those filled up, and there's new projects underway. We had neighborhoods across the country with, like you said, 1,400 to, several thousand homes vacant.
Yeah.
Some of them with just slabs, and we ended up tearing those down because it was cheaper to tear them down than it was to maintain them and pay the real estate taxes on them and things like that on the improved property. So there's been a huge transition and builders got smart. It's like you said. So they didn't, this is, builders at scale. National home builders did not go out and buy land and just start building thousands of homes. They started doing contract deals.
Correct.
So they were only building for the contracts they had. So as that supply contracted over the years, there was still a lot of demand. but we have not been able to build because so many people exited the industry back in 08, 09 after that crash. People just got out of construction. So there was not enough labor. And there wasn't enough labor in the beginning to keep up with it anyways. But, once that happened, a lot of people transition and people just aren't going into construction, aren't going into the trades. And it's becoming more and more difficult and time consuming to build. So we haven't been able to, catch up. And I think right now it would take us, I think the projections at this rate are about 10 years to build through the demand that's pent up out there, from an inventory standpoint. And, you're just not going to see builders able to do that, even if they wanted to. But the biggest thing is, like you said, there was no market for rent back then. There just weren't enough people like there is now because we haven't delivered enough units, multifamily or residential.
Yeah. So let's take a quick gander of this article. I have not read it yet. I just knew that I was talking to you, so I pulled it up. Home builders lower prices as sentiment falls for the 9th straight month. Again, this is something basically it's all around that standing inventory, right? Kind of the headlines, again, it came in at 46, as always in a lot of these sentiment reports. 50 is the barrier, right? Below 50 bad, above 50 good. So we are now clearly below 50. It started as high as I think 83 or 84, which I'm sure is in this article somewhere. A quarter of builders reported lowering prices. So you hear this a lot, right, Greg? Home builders are slashing prices down 126 grand. Well, about 25% of builders have been forced to lower, probably in Phoenix, probably in Vegas, probably not in Florida, I'm guessing, given what I read, but maybe. But this clearly shows all builders aren't lowering prices, right?
Yeah, it's still just getting started. And again, you can still get interest-only loans in the fours. So, it's not terrible for the borrower, but a lot of people don't want an interest-only loan.
Yeah. And then this is your point. You actually made this earlier. Higher costs for land, labor, and materials, and haven't fallen to the bottom line. So as the builders pull back, this will force land, labor, and materials to fall further and, eventually, maybe lower the cost of building. So
yeah, land is a leading indicator. So land is always the slowest moving segment of any market. So when the housing market corrects, land just falls off a cliff and those prices come back the quickest. And that's what we always see. It takes a lot longer for housing to adjust than land. Land will start adjusting much quicker.
Yep.
And, people have less invested in land versus, the mortgage rate lockdown that we're going into right now, where people, 70% of the loans are sub 4%, probably 60% of them are 3% or less.
Yeah.
They can't sell. They're stuck. They're locked in because their rate's so low, and they could rent, and they probably would rent versus, rent their existing home versus selling it, and rent where they're going versus buying because there's nothing to buy and rates are just obnoxious right now.
Yeah. So as I said earlier, I was right. It was 83. I might have said 82 earlier. That's where we started in January. So it's down 9 straight months. It now has gone to 46, as we saw earlier. 50 is the dividing line between.
And it's all rates, and you and I have been talking for a couple of years about all this. And I've always said housing is directly tied to the rate because people are buying payments. And a lot of people still don't agree with that and still want to argue with that. But I mean, look what it's done. It is what it is. Now, the difference is the rates got so low. Like I said, so many people got locked into low rates. They're just not going to sell right now. And there just wasn't enough inventory. I know a lot of people think that it was all-time demand and demand was out of control and all that. It really wasn't. Sales were way less than 2017, 2018. It was the lack of supply is what created the price hike and the low interest rates. And the same thing happened in the car market. The only reason you pay $70,000 to $100,000 for a pickup truck or an SUV now is because the whole 72-month, 84-month financing, and people are buying payments. And now, I mean, the average car payment's gone from, it used to be like $500-600, $400-600 to over $1,000.
Yeah, there was I think it was a TikTok video I saw about somebody at a car dealership going around and saying, how much is your car payment? And their payments were like $1,200, $1,300, $1,400. I'm like, oh my God, what are you guys doing? That's just nuts. But anyways.
It is. And there's a new record that was set this month for, the amount of buyers that are paying over $1,000 a month per vehicle payment. And there's a lot of talk out there about that being like the new subprime crisis. Obviously, it's nowhere near what the housing market was, but a lot of lenders loaned 150% or more on cars.
Wow.
And people are strategically defaulting on their vehicles because they're losing value. And the payments that they're paying. So they could go buy a new car with a cheaper payment at a lesser price than what they paid a year ago.
That's nuts. So here we go. A quarter of home builders reported lowering price, up from 19. So again, the trend is there. But another way to say this, 75% of home builders aren't lowering prices. That's another way to say that.
Yeah, yeah. They've got a little, time to hang on with existing inventory. Some builders are in better positions than
Yeah.
others, obviously, when you average it out nationwide. And then there's still the thinking out there that the Fed's going to pivot and rates are going to come back down. And
Yeah.
we saw that thesis play out
Yeah.
over the summer
We did.
when rates dropped and the market rebounded when everybody thought the Fed said we're pivoting. I think now everybody's realizing the Fed's not going to pivot. They're going to keep after this inflation thing, and they can't pivot. I think
I don't think
markets
they
are
can.
starting to realize that and price that in. And so it's just going to take a little bit longer for the housing market to digest everything because it's a little slower moving. But builders in the markets where they have to can.
Oh yeah,
they can move fast.
Yeah, really what I see going on in that article kind of pointed at it. 25% of the markets, maybe it's 30, maybe it's 33%. Demand is stopped. They have to blow out the inventory, and they will. But that's not 100%. Shoot, that's not even half the country, right? Again, a lot of the country is still doing okay. There are a couple of bubble markets, boom towns, Vegas, Phoenix, a lot of towns where iBuyers I think iBuyers distorted a lot of markets, and there's a price to pay every time there's distortion. Then let's wrap this one up about the Fed. We got a Fed meeting on Wednesday. I'm expecting 75, but hoping for 100. What are your thoughts on Wednesday? Any thoughts?
Yeah, it'll be 75 unless otherwise telegraphed. So the Fed is not going to surprise the markets and raise 100 basis points without telegraphing that move first. And I think right now they're going to go 75. They don't have a meeting again until November.
November 1st.
Yeah, November 1st. So they'll be able to skip October. So I think they're going to leave it right now, unless they say otherwise. So if an article comes out,
unless there's an article from the Wall Street Journal in the next 24 hours,
and it would have to come out today, because they're starting their meeting tomorrow. He's going to speak on Wednesday.
Correct. It would be today. Yeah, the article would come out tonight.
Definitely not going to be 50.
No,
the markets would collapse on 50. So I think 75 basis points. Everybody's happy. You get a nice little rally, and then bam, it starts kind of rolling off when they realize, wait a minute. This means trouble.
Yeah. I don't know if you want to play here, but I'm going to kind of share with you my thoughts. We have 3 more Fed meetings. We obviously have Wednesday, November 1st, and I want to say December 13th, although I may be wrong on that. What I see is 75, 75, 50. I think the Fed is serious, and they're going to take us up 2 full percentage points inside of 90 days. What do you think?
Yeah, I think that would be a minimum. I think if inflation comes out hot again, they'll go 100. If this inflation report was hotter than what it was, they would have gone 100. But yeah, I think 75 now, 75 coming up. And it's really funny because Wall Street's trying to bully them.
They are.
We're seeing people that are coming out saying that you're going to destroy the economy. You're doing too much too fast. And, because it takes time for this to sink in and all that kind of stuff. And, but the Fed's nimble. So if there's damage being done, they might reverse course. And that's kind of what people are thinking. And that's why, the markets haven't completely unwound yet, is because they still believe the Fed's going to back up if the markets, if things happen or something breaks. But unfortunately, unless inflation changes, it can't. And you and I talked last week about inflation, and the biggest caveat in there, sure, gas prices have come down, but that's about it. Everything else was up. And I'm like, I don't know where people are forecasting that inflation was going to be sub 8%. Nothing has come down. Rent has gone up. And what's funny is people think rent's plateaued. It hasn't. Rent is still going up because
just slower.
Well, a little bit slower, but I mean, it's been double digits. And what's happening is investors are paying record levels for houses, record high levels for multifamily. So the only way they can make those deals work is they have to jack the rents. So rents are not coming down anytime soon. So that is a big factor in that core inflation that a lot of analysts are saying is going to ease on the next inflation report. And I don't see that coming down anytime soon.
No, I don't either. And I was really shocked by the food component, 11.2, highest since 1979. And anybody watching this, anytime you compare an inflation number to the 70s, that's bad. That's just
bad. And I'm in tune to it. So I shop every day because we just don't eat a lot. So I just go get whatever every day at the grocery store. It's right down the street. So that's kind of always been the way I've shopped and lived, because I've always had a grocery store like right there, a couple of minutes away. So I'm watching these prices, and it's just it's nuts where some of these things have gone. I mean, just look around. You know, that's all you got to do is go to the grocery store and then talk to people in the restaurant industry. Nothing has come down. And the most sticky components of the inflation are going to be rent, and rent because what investors are paying for properties. They have to keep rents high. They have to go up as rates go up. That's the other shoe to drop. So a lot of these multifamily deals that were done over the last few years were done on bridge debt, interest only. That's going to reset at higher levels. The only way they can, make that work is they got to jack rents immediately. Now, they can only do that on renewals. They can't do it in place, but a lot of that's been done. So as these leases, renew over year, you're going to see rent's going to keep going up double digits because it has to keep up with the interest rates on these properties.
Yeah. Thank you so much for being a part of this every week. Several years, probably 3 years. You have an amazing playlist. People need to go back and watch. But where should they reach out to you or follow you?
GregDickerson.com. That's where all of my info lives. Go check it out.
Thank you, buddy.